What's going on, everybody? It's Jeff here. Welcome back to the channel. First off, I want to give my apologies for the video I made yesterday, not talking about anything I said or the content inside of it, but just about the title. I did notice very early on, I had to leave my computer and go pick up my son, that people were commenting on the fact that I wrote AMC stock update and the stock, why this stock dumped so much. And I think they were correlating the two as being the same stock, even though AMC did close in the green. I do want to apologize. I did change that title over to CEI, which is the stock I was referring to, and I did refer to in my video. I don't think my phone had updated it quick enough, but I do want to give my apologies on that. I've tried to never put clickbait in my titles because it really leads, it builds hope and builds false expectations. And I know as a viewer of anything I view, visually or, read, I hate it when people build false expectations because it really just lets you down and annoys me. So I really tried hard not to have that happen. I do cover AMC pretty much a little bit in every single video because it is something that I've covered since pretty much the start of this year. And I want to continue to give an update on it. When I have what I call as like breaking news or major news and I want to cover to you, I always try to prevail that. However, every day there is not breaking news, and I really try not to, like I said, give those false expectations. So if I did, I apologize in that. But in this video, I want to talk about what is happening inside the entire market. There's a little bit of fear happening, and I have noticed throughout YouTube and other social media sites that some of the interest in viewership has gone down. And I see that because we are not in that insane bull run that we've had and where it's just easy to throw money in any single stock. And it doesn't matter if you don't look at your phone for a couple hours or a couple days, you're going to come back and you're going to make money on it. We're not living in that times right now. It's a big reason why I've said we've shifted over from, the long-term portfolio and the heavy, long-term swings, playing some very short-term swings and just playing some quick trades, getting the money while we can, preserving our capital to be able to invest it on all these great stocks that are going to be trading at a lower price from their all-time highs, giving us great opportunities. So in this video, I want to talk a little bit about that. First thing, I want to cover this article right here. It says, don't worry too much about an October market crash. First off, this article is probably written trying to get individuals to continue to dump their money into the market and not pull out. But however, I do not expect, and besides anything that happens that is catastrophic, the market to crash. There's been so much money that has been printed and pumped into the economy. And even though it's printed and we continue to go into debt and there's other issues surrounding that, it still provides, the liquidity that is needed for the market to continue to go up. People are going to be buying more things, spending is going to be going, earnings are going to be higher, revenue is going to get higher. And it just provides more individuals with cash flow that do want to invest into the market, as well as 401ks going up, and it kind of just expands. So that's why I continue to see the market on an uptrend for the next few years. It might be choppy along the way. We have still not hit that 10% correction after being in the second year of the bull run with the SPY, which we are awaiting. So keep that in mind going forward. A couple things to look at in the short term, then I'm going to talk a little bit more about the long term and just how to play the market right now. So first off, the debt ceiling is continuing to loom. A lot of investors were a little fearful as this has dragged on as far as it actually has. However, there is some loopholes. So one, you have Mitch McConnell saying that he will look into potentially offering a short-term debt ceiling extension, as well as Janet Yellen saying that she can literally issue a $1 trillion platinum coin, deposit into the Federal Reserve, and that will keep the ball rolling for a short period of time. Investors are a little bit worried just how the government is exactly handling this issue. However, it is a political issue. They do this in order to point the blame on each other and gain power going into the next election. That's all this is. One thing I do want to point out that was positive today and what to look for going into Friday is the jobs report. You had the economy reopening. However, jobs were starting to decrease, especially as of last month. And that was partially due to the fact that unemployment was still giving the $300 a week bonus, as well as many individuals still had money left over from their stimulus. So as you're seeing that start to run out and individuals are not getting that added bonus onto their unemployment, it's not really as enticing to collect the unemployment, and going back to work is something that is inevitably going to happen for a lot of these individuals, which is why you are seeing private payrolls increasing. And look for the jobs report on this Friday. That is what's happening in the very short term. Let's take a look at the SPY, and then we're going to get into how we've been playing the market a little bit. As you can see, this 430 level is maintaining or acting as a little bit of support right here. You start to see a curl starting to happen. We do have this downtrend continuing to happen. If we do break through this little trend line, look for a swing moving back up to the newer highs. I will say this though, from that 454 level, we've only gotten down 6%. So we're still a ways away from that 10% correction territory. and didn't come anywhere near that 200 moving average. So keep that in the mind going forward. we're not yet out of the woods, in my opinion, and I'm not ready to start dumping back into these, these blue chip stocks like I have so heavily. If you are holding on to blue chip stocks, such as Apple, and let's say you bought it at that $150 point, you rode it up to 157, never sold, and now you're sitting back at the 140. Couple things that you could do. One, you can either average down, okay, or if you don't have any funds to be able to do that, you could literally sell covered calls against your shares. As long as you have at least 100 shares, you could sell one contract. And this goes for any stock, that you are bullish in, that is going to uptrend. I'm not talking about a pump and dump stock or a hype stock, like CEI, that might actually never get back to its its highs as it did. It's sitting at $1 today. I covered this yesterday. I think it was at $1.50 close. I'm not talking about stocks like that. I'm talking about actual blue chip good stocks of qualities that are just beaten down a little bit because the market is beaten down. You could sell covered calls against your shares. If you're unfamiliar with this, do a very simple search term, covered calls. I do have a complete options training video in for everybody as is a part of the private community that goes through in detail all these different strategies. But it's something that you can do in order to, one, protect yourself against your portfolio, gain a little bit of income right now, and wait for Apple to go back. Because in my honest opinion, looking at Apple, especially if you zoom out even a little bit further, it continues to trend upwards, and it most likely will, because Apple is just a absolutely dominant company. But when it comes to how to play the market day in and day out, if you're not looking to do any of those strategies and you're sitting there like me, that has gotten rid of a good portion of their long-term positions and is waiting for the right opportunity to be able to start to dollar cost average into new positions, that's why we've been playing many of these short positions. These are the plays that we called out literally pre-market and rode some massive gains, got in very, very quickly. And it's okay to be able to do that because, like I said, that's the market that we're in. First one is going to be Novavax. This one was right out of the gate. I called this one out saying a breach above, I think it was 165 would give you a few bucks. I think it was $2 to $4. It got all the way up to, I think it was a 350 gain. Other one that did very well for us was Nvidia. I said this one over 202 would give you about a $4 gain. It got all the way up to 206. Could have gotten out of it very quickly, out of it right out of the gate. You simply buy it, set your stop loss, set your sell limits. If you can't see at your computer, you're out of it. You set your stop limits at $1, $2. You lose $2 on the play. Not every play is going to work out. It's natural. Give yourself enough room. Set it as a break of support. You're not just blindly setting these, and be able to get some gains on these going forward. And this one, was very, very well today. Another one was BT. I think I gave this call over $12, would give about a quarter. I think it was $11.50 ads on the dip. It got all the way down to $11.10. Continue to play this one as well. Grom was a great mover. I think this one continued a little bit in after hours. This was a phenomenal mover. We caught all the way from 350 on the way up, all the way into a halt. That was a great one. As well as, I think this was the last one, was VYGR, a little bit right out of the gate. I do want to point this out for those of you that are a little bit unfamiliar when it comes to what the term soaking is or what demand zones are, is when you see this type of action happening, these means shares are being accumulated right now, and they're literally dropping the price a little bit to be able to scoop up more shares. They also could be trapping shorts at this point. So we're a nice move to the upside. I think we took this at 385, got out of it right before, as you can see right here, that resistance at the 408. I think I got out of it at 411 when I was filled, but right out of the previous resistance, got out of it. It was a great play. And like I said, while I might not be the biggest fan of staring at my computer and taking some of these day trades, they can be a little bit riskier. I like to play the swing trades a little bit more. We're just not quite yet in that market. So eventually we're going to get back to that. Let's keeping a very close eye on SPY. Also take a look at what the VIX is doing. That's your fear and volatility based index. If we can keep this around this 430 mark, break through that trend line, get another move to the upside. We do have to get through this next month about everything that is happening currently with the debt ceiling and other issues that are going on in Congress. So that's it for this video, guys, and I will see you in the next one.